Hello everyone. It's 2:42 on Tuesday with the two of us, Ben and myself, of course, coming in hot with some mortgage updates as well as market updates and anything else that we have to share. So I'm hoping Ben will hop on here in just a second. Today is an amazing day. I had a all partner meeting, which essentially is all of our businesses together to have a meeting about everything and anything. Nice haircut, babe.
Thank you.
Looking all handsome. So we're going to talk about the market just in general terms, bring up a couple of conversations, the do's, because we went through all the do nots, so the do's, and talk a little bit about rates. And yeah, so I did want to start. When I was at Mega Camp, which is a real estate convention, they talked about being the provider of insider info. And so I know with Zillow and Redfin and real estate news and all of that, that people are just inundated with information. And so I want to bring this back to the people, our sphere, friends and family, the community. What kind of insider information would you guys want to know that would be helpful to you in general with community, with real estate, with mortgages, whatever it may be? What is that insider stuff that you can't get online that you would like to us to talk about each week? So that was that. Um, uh, uh, a tip personally, not inside of real estate or mortgages. One of the things I wrote down is find your partners, not your passengers. So who are you partnering with together in life, in your home front, at your work, in your personal life, all of that, to be able to continue to grow and evolve and hit those goals. Obviously, if home buying or home selling is one of them, we're here to help. And I want to be able to help on a different level, whether it's self-image, helping fitness wise, or meal plans. What else could people, relationships? Like there's people that we can connect with that can be a partner in your business. We have partners in our business for service providers, all that kind of stuff. So just figuring out what those partnerships look like and not just someone that's along for the ride. Collaboration and community is so important. And instead of just being a piece of the community, I think it's important that we build it and be contributing to it.
I love that.
So, okay, Ben, let's talk about rates. I heard that they are the lowest that they've been in 10 years. So, or the best trend down of 10 years. So,
Well, not today. I love the hearing. That's the question I get all the time is I heard rates are going to go down even further. The Feds lowered them, or they're going to lower them, or they're the lowest they've been in 10 years. And the news is amazing is what I'll say. Because today they actually, if you look at the reports, they're actually up higher right this moment than they were yesterday. Okay. So they're technically not at the lows, but they have been, and it's very volatile. That's the word I want to use is in order to truly take advantage of the lowest rates is you have to be ready. You have to have your full pre-approval or have conversations with your partners, not your passengers, and put yourself in a position where you're ready to capitalize on that. Because yes, the Feds may cut the rates and it's looking like they are, but what does that mean? Most people lately, the question I asked is, when the Feds cut the rate, can I get that rate really low? Like, can I get in the 4s, right? And the quick answer is no. You know, it may end up going that route, but there's so many more factors in play than just the feds are going to cut the rates. You know, the rate that they actually cut is the short-term rate. So, you know, credit cards and auto loans.
Consumer, yeah.
So
Yeah, those.
that's amazing. I mean, that's great for that. But then the people take the bond long-term money out, put it in their short term, and in the immediate response, what happens to the bond market? What happens to the mortgage rates? They go up a little bit. So
Mhm.
will the rates come down? I do feel yes, eventually, right? And I want to also say that the biggest thing is rates shouldn't be the biggest factor in why you're buying a home. There are so many more goals and so many more steps to buying a home and building wealth in real estate. Rate is just one of those, you know, factors in there. Just like when the Fed lowers the rates, it's one of the factors to show if the rates are going to come down. There are like PPI reports, CPI reports, and we can go into that more in detail later on what those actually mean. Inflation, so many different things to put us in a position where, yes, it's basically the economic data. You know, it's what's going on around us is going to truly tell us what the rates are going to do. And the feds are going to help play a part in that. So yes, they have been and touched recent lows of over in the past few weeks, the lowest they've been in about 10 years. But in that essence, they move every day, multiple times. So it
Yeah,
may,
minus the COVID year because that's unrealistic. But
well, I was just going to say that was my next thing is it technically not 10-year lows. It's that was a very, very, very low year. That was the lowest of all time.
yeah,
And they could go up. I want to make it very clear that, you know, feds could realistically lower the rates here soon, like they're talking, and the rates could go up. And you could be sitting there going, wait a second, I was told by a professional, I was told by someone that I should wait or I should do this. And that's why the point of this is do not wait for the rates to buy your home. If you find there's always sometimes opportunities when somebody's going one way, somebody is going this way. When you lose money in stocks, someone gains money. When you gain money, someone loses money. So in that, when the rates are going up or there's always other opportunities. So reach out to us, reach out to other people to have that conversation to find out what are those. Is that closing costs? Is that, you know, a lower purchase price? You know, there is a buyer demand, which I know Nykole will go into next, that you can take advantage of so that you're not put in a position like the COVID years where first-time home buyers really they couldn't make an offer because they weren't accepting those, you know, offers out there. This is a perfect first-time home buyer market.
yeah. Well, and I think too of what you touched on in the very beginning is that what is the public hearing right now?
Yep.
That rates are good, that they're lowering, that they're doing this. I mean, applications for mortgages are higher right now than they've been in a really long time, right? People still need to get approved. We're running into credit issues, debt to income issues, all of that kind of stuff. But when the general public is being told that week after week after week, day after day, there's going to be more buyers out there in the market then. And if the rates really do drop, I think it like brings like $5 million more buyers, don't quote me on that, into the market. And then there's going to be competition again. And so then we come back to, you know, when the rates were lower during COVID, what made that crazy was that everyone wanted to move money. Everyone wanted to buy. Everyone was out there in the market. And we were looking at, you know, cash for low appraisals, multiple offers of homes, you know, going way above and beyond what they should have been. We saw a 43% increase in equity in some areas. It just was super unrealistic and unmanageable and not great for those opportunities. So now my concern is if people don't jump in on it and don't get going and, you know, looking at what their opportunities are and not even having to take action, but just a conversation, they may not be able to get those closing costs and get those, you know, lower prices and all that kind of stuff. We're still in an adjustment of sellers going through those price things. But at the end of the day, they're not going to lower their price and pay closing costs and do this as soon as buyer demand starts to pick up a little bit more. with more people wanting to get qualified. So if you're sitting there on the fence waiting for rates to go down because that's what you're hyper fixated on, you're going to miss the opportunity. It's like stepping over a dollar to get a penny or stepping over a penny to get a dollar. You're missing all of what's really going on. And if the payment makes sense, buy the house, right? Like that's regardless of prices are going down and we're just adjusting to the market,
Yep.
we still continue to see increase in your equity year after year after year.
Well, I heard this recently. One of my clients who is on the wealthy end, they have a lot of assets and they are sitting on the sideline. And they're looking at that higher purchase price of $1 million plus. They said a friend of theirs that they trust wholeheartedly, who is not a real estate professional, thinks that the market is going to crash. Now, I don't have a crystal ball. I can't tell you if the market is going to crash or not. I can only look at historical, economic data and see what's going on currently and kind of make a best educated decision based off that. The one thing that we see the most of what you just said that's most important of if you qualify and you can afford it, buy the home. Because when you look at buyer demand in history, a higher demand with limited supply usually leads to increased price of home. And if you're a seller and you can raise the price of your home because there's multiple people trying to buy it, you don't need to pay closing costs of upwards of 10 to 15 grand, which is about what it costs. You don't need to, give away and lower your price. You're going to be selling it for more because you have competition. When the rates in a market like that, when the rates start to come down and more buyers flood in, with lower supply, more buyers and lower rates, meaning more people can qualify, it's going to raise the prices even more. So the idea,
That's what we went through with COVID. And
exactly.
I think when we talk about like what does include a market crash. So people are thinking, okay, prices are going down. We're starting to see some foreclosures and short sales, those types of things. What indicated a crash, so on, in '08, and I love the Big Short movie because it really does cover a lot of it, were bad loans. Okay, we're not writing bad loans anymore. We're not in that situation. Are there people that are losing their jobs? Yes. Are there people that bought in 21 that probably shouldn't have and went over, their budget or their means and now, or they were right there at that line and now groceries and gas and everything is more expensive that they can't afford it? Absolutely, right? But they still have equity to walk away from that. We have like 90%, it's probably not 90%, I'm exaggerating, but just a huge percentage of people that have so much equity in their home, there's not going to be a crash. That's just not what's going to happen. Are we in an adjustment? Are we in a recession? Absolutely. We are in a real estate recession, hands down. There, that, hi Ryan, that is reality. But usually when you notice that we're in a recession is when we're coming out of it. And I truly do believe that. I do think that agents are having a hard time pricing properties and not having tough conversations with their clients on what those homes are worth because they are desperate to get a transaction and a closing because there's not as many out there for real estate, so they're making bad decisions on behalf of their clients and putting homes on the market for much higher than actually what they are worth.
Agreed.
And then we have sellers who have unrealistic expectations, but again, the agent is not willing to have those conversations with them, or does and just says, fine, we'll just put it out there, let's see what happens. We've all been there, and now we're starting to see market trends go down. And as a new listing comes on that's a lot lower than yours, you're going to end up chasing it versus listing 10 to 15% below market value and potentially getting multiple offers. I've seen that happen too. So, it's all just a strategy and what's best for them, but we're just seeing an adjustment. we're not seeing how we're not going to see a crash, and really asking them, what does that mean to them? Where are they getting this data? How does that look like? And again, if you're willing to stay in your home for the next 5 to 7 years, who cares if it crashes tomorrow, because you're going to ride the wave all the way back up again.
Yep.
So if you're looking to just get in it and move in 6 months, I wouldn't suggest that no matter what market we're in.
Correct.
So, especially at that price point, because really you're not going to rent it out, you're not going to do any of that. So, that's just my 2 cents in what that looks like.
And
So,
the data to back that up a little bit, I read somewhere, and I don't have the exact link to post here, but it was 50% of our population today has under a 4.5% rate. So, if you look back to when we had these crashes and you look at what the historical data tells us, the reason why people, and we would probably do the same thing if we lost a job or something happened, if we're underwater on our home and the home rate is 6-7%, and we can walk away and just file bankruptcy or do something along those lines, we're more willing to do that because there's cheaper rent and there's cheaper this. But when rent keeps going up and home prices keep going up and you have equity and you have a low rate of 4% or 4.5% or even lower, it's very hard for a consumer like all of us to just walk away from that when you could almost just claim unemployment and still pay your mortgage. So I don't think we're going to have the same. Yes, I do think we're going to still have foreclosures. We're going to have short sales. I think every market moving forward is going to have that. But at the maximum level of a crash, I don't think we're going to see. I think we're going to see, these things rebound and closing costs will probably go away. And these home prices that were coming down a little bit because of unreal expectations are going to start fitting in with what's going on. And you may see prices go up and you're going to go, wait, I was waiting for the rates to come down so I could buy this house, and now that house is $50,000, $60,000, $70,000 more, and you're not getting closing costs, and so that takes your first-time home buyer out of the market. So if
or
you're
even a second buyer. I mean, we look at of you want to sell and buy. So maybe you're not going to make exactly what you want on your current home, but you're going to make it on what you're buying. So this type of market is so good for move up clients as well, and whatever that may be. And so again, when you're pricing your properties, I would be aware of, okay, here's all my competition. This is what's doing. I know buyers are now looking in other areas. So before it's like, okay, what's my micro market? What is an appraiser going to look at, when they're coming for comparables? But really, you got to look further out too. Is where are those buyers coming from? And if they're looking in this neighborhood, what other neighborhoods are they looking at? Because people will move a little bit further out to be able to get what they're looking for or the price. So making sure that you are the best condition and the best price property for condition in that area, so that buyers are wanting, just begging for your home, is huge. Okay, so what is our due?
Oh, I got that. So like you said, we are done with the don'ts. We've moved on to the do's, and the do says, do notify your lender of any address change where it's your home address or any listed on your application.
Whether it's your home address.
Yeah, whether it's your home address or on your application. Just make sure you communicate again. I know we keep going over this, but just make sure you communicate with your lender. So if you do change addresses, we have to update your application so that it is current information. So when they make the underwriting decision on your approval, that they're verifying all that information is correct so that you can get the max pre-approval amount you need.
I love it. I'm going to leave it with a couple things. Number one, if you know of anyone that's going through a pre-foreclosure, haven't made their mortgage payments in months, are on the verge of not being able to pay their mortgage payments, are underwater in their home, just struggling in general, please share contact information, have me reach out to them as well, whatever it may be. We would love, love, love to be able to help facilitate some of that and what that looks like. And then my final question to everyone, because I feel like no better time than start to get uncomfortable and really challenging ourselves is what would be your next step if you knew you couldn't fail?
Ooh.
And what would be your next step even if you could fail? What are you holding back and telling yourself to stop doing, or that you're not worthy enough, or you don't provide that value or deserving, or whatever our internal limiting beliefs that we tell ourselves. I can't call that client. I'm not worth it. Haven't talked to that person in 5 years, so that relationship doesn't mean anything. Or um, I'm avoiding this, or whatever it may be. What is that thing that makes you super uncomfortable that if you did it would impact your life hugely? So I'm going to challenge everyone to go do that. I want to hear what everyone's thing is, and when they get really uncomfortable, to let me know, because I love helping people grow and
Yeah.
see what their next opportunities are and getting really uncomfortable.
You brought it today.
Awesome. So I hope you guys have a good day,
Yeah.
and let us know if you have anyone that's looking to buy, sell, or invest in real estate, or just has general questions about mortgages and real estate or anything, or wanting to get into real estate or wanting to get into mortgages, whatever it may be. It's just a conversation. People get so scared that it's like a done deal and that, we're going to magically convince you to buy a home or sell your home, whatever. No, it's a goal strategy meeting to figure out what your next steps are and what is your opportunity in building wealth.
Yep.
Have a good day.
See you later.